All right. Um, Spent a lot of time on this section. This last couple gonna go pretty quick because we touched on a lot of the stuff already. Uh, the CFPB, the Consumer Financial Protection Bureau, this was created by Title 10 of the Dodd Frank Act. All right. The Dodd Frank Act was the Wall Street Reform and Consumer Protection Act. It's amazing how many consumer protection acts actually end up backfiring and biting us in the butt. Okay. The Dodd Frank or the CFPB is an independent agency responsible for consumer protection of the financial sector. So basically, anything in the financial sector, like banks and credit unions, securities, those payday guys that give you loan sharkers, mortgaging, servicing people, foreclosures, debt collectors, all of these people in the financial world are covered under the Consumer Financial Protection Bureau. Um, Took effect in January 10 of 2014, so it's just 2 years old. Although the Dodd Frank Act was 2010. Okay, reading a little bit from my other notes here that I had, and basically what it is, I think the belief with the government is the more they tell you, the more you're protected. Now, I don't know if that's necessarily true, but I think that's their belief because the one of the big things the CFPB does is it requires lenders to disclose things to the consumer in the thought that your knowledge means they're not cheating you somehow. Like um, they have to give you the billing information in writing. Okay, that's one of the requirements. That seems to make logic sense to me. Are they going to call you and tell you? I guess they could have. They have to give you 2 months for you. For those of you that got an ARM, an adjustable rate mortgage, right? Anybody? Gwen, you what's at the end of an arm, don't you? That's right, the middle finger, because that's what's going to happen. Um, if you got an arm, um, the lender now has to give you warning that the interest rate's going to go up. They got to give you 60 days. Okay. They've also, lenders, financial institutions have to promptly credit the borrower's payments. So when you make a payment, they're supposed to apply it to it as promptly. I don't know what that means. Respond quickly to borrowers asking questions about the payoff loan. And you know that this was written by an attorney. And if any of you guys are practicing, anybody here practicing attorney? No? Good. I thought I was going to slow down a little bit. Anybody out there in listening land, if you're a practicing attorney, I apologize up front. Um, because, what was I talking about? You have to respond quickly when a borrower asks about paying off the loan. What's quickly mean? Quickly for you or quickly for God? I'm sure that God has a much different time schedule than I work on. All right. So quickly for a mountain, quickly for God, quickly for you. Not charged for issuance of a borrower who doesn't need or overcharge insurance for a lender provided if the borrower fails to do so. So forced placed insurance. Can't overcharge. You guys know what forced place insurance is? Remember we talked about the last section, pity payments, principal, interest, taxes, and insurance. And I said insurance was homeowners insurance. And they do that because they don't want the home to be uninsured in case it catches fire and burns to the ground. Now that lender has no collateral to protect his loan. So they will pay the insurance. If you fail to pay the insurance, okay, they'll pay the insurance because you've been making the payment, all right, to them, and they take your money. Not they pay the insurance. They write the check for you, it's your money. What forced place insurance is this. If you fail to make the payments to pay the insurance premium, the bank will not allow the house to be uninsured, so they will go out and have forced placed insurance. They're going to go out and get insurance for you. Used to be that insurance was about triple what the insurance you would have been if you'd have just went to Flow and got it anyway. So because of that, now this new rule says that they can't overcharge for that. Not charge for insurance that the borrower doesn't need. So if they don't need forced place, they can't charge for it. Boy, that's a heck of a law, because it seems to me they're just flat out saying, yeah, you can't cheat them. Should be common. Or you can't overcharge for insurance if they have forced placed insurance, okay? Quickly resolve complaints. Now, this is one of the first things that does say 30 to 45 business days. All right? That's 9 weeks. 45 business days, not 45 calendar days. All right? You're supposed to have and follow good consumer service policies. It's pretty bad when we have to write a law to tell them to have customer service. Work with the borrower if they're having trouble making the mortgage payments, and allow the borrower to seek a review of the decision about a loan workout. So they now have to issue workout. They have to issue modifications. They have to try and work them out. And if you can't work them out, they are allowed to seek review of that decision. So if they ask and say, help me out, and the bank says, and they say, and the bank says, and they go, we don't like that answer, we're taking it to arbitration. So I always want to be cool for an attorney to fight that. Wouldn't that be a good defense? Did you do it? No. Yes, you did. How do you fight that? Well, anyway, that's what these guys do, okay? The CFPB also is the one that created the issuance of those new 2 forms we talked about. Remember, the loan estimate form and the closing disclosure form. Did I get it right that time, David? Yes, I did. Thank you very much. The loan estimate form or the closing disclosure, the CFPB brought about by the Dodd-Frank brought the CFPB, and the CFPB brought about these new forms. They're from the government. We're here to help. All right. Any questions about the Consumer Financial Protection Bureau? Anything? Nope. Am I that good, or are you guys that good? What? Alicia, say it again. Consumer Financial Protection Bureau, CFPB. All right. I said board. Once again, I don't want to admit that I may have made a mistake, because I think I was wrong if I did. It's Consumer Financial Protection Bureau. All right. All right. I'll tell you, let's keep moving on.